We're bringing you stories from the world of business, policy and economy. First up, the headlines. After Reserve Bank's announcement to withdraw 2,000 rupee note from circulation, India's largest lender, SBI, says no ID proof or forms will be required to exchange now withdrawn 2,000 rupee note up to 20,000 rupee limit. And jewelers in India are receiving more inquiries for the purchase of gold or silver as people find ways to dispose of their cash. Also on this bulletin, amid backlash over 20% tax collected at source, TCS, on credit card spending outside India, the Ministry of Finance has now clarified that no TCS will be levied on payments up to 7 lakh rupees. And the Food Safety Standards Authority of India, FSSAI, says it is now evaluating new guidelines issued by World Health Organization, which said that non-sugar sweeteners likely can increase, in fact, type 2 diabetes and cardiovascular diseases. All that and more on this bulletin. With me at this point in time, my colleagues Karthik Malhotra here in the studio as usual. Good morning, Karthik.
Good morning, Shweta. How are you?
I'm very well. How are you?
Very well.
And Rakesh joining us very, very shortly. I want to come to you first, Karthik. An ongoing story that we've been tracking very closely since Friday evening, is the withdrawal of the 2,000 rupee note. We're now given to understand that SBI, which is India's largest lender, says you don't really need any forms in order to dispose of your cash.
Correct, Shweta. So what many feared on Friday evening, even as we were in the studio and trying to make sense of this new withdrawal of 2,000 rupee notes that came in, a lot of correlation was made with demonetization. And everybody trying really grappling hard to understand, is this demonetization or is this a simple withdrawal of currency notes in exchange of different currency notes, perhaps of a smaller denomination. So, of course, the story sort of continued to make headlines over the weekend as well. And SBI then issued its own clarification on its part, stating that you don't need any KYC, you don't need any PAN card, any Aadhaar card, any documentation whatsoever if you want to go and withdraw your 2,000 rupee notes. Now, of course, the limit for each exchange is limited to 20,000 rupees or 10 such notes at a given point of time. But there's no cap on how many times can you stand back in the queue, go and exchange the next lot of 10 notes of 20,000 rupees, and how many times up till 30th September can you come. There's no limit, no cap on that whatsoever. So it raises the fundamental question yet again on why did the government go ahead and withdraw these notes? Because if it was black money that the government was after, the whole modus operandi seems to defeat that end objective. Right. At the same time, if it is to do with with lower denomination currency notes to be now introduced, so there are speculations and some suggestions, if I may, being made to the government that, hey, why not look at the 1,000 rupee note again? And the argument being that the 1,000 rupee note that got demonetized along with the 500 rupee notes back in 2016, the case of 1,000 rupee notes today with inflation carries a much lesser value as it did in 2016. So the goods and services you could buy in 2016 from 1,000 rupees are a lot reduced today with the same 1,000 rupee notes. At the same time, many people are speculating that 500 rupee notes may be the highest currency notes, and some even suggesting that maybe the old 2,000 rupee notes get taken away and a slightly facelifted new 2,000 rupee note will take in. But tough to say right now which side this tide is really going to turn.
Okay, we'll have to wait and watch out. But Rakesh joining us at this point. Rakesh, good morning to you. It appears that SBI, while making it relatively easy for people to come back and dispose of whatever 2,000 rupee notes they have, is not going to ask for any details as to who it belongs to. So it defeats the entire purpose of trying to find hoarders of money.
Absolutely. Morning, Karthik. Morning, Shweta. I think, it tends to make us believe that the whole core purpose of defeating black money is, so to say, defeated by this particular action. We don't have the full details, so I am not sure exactly what is the rationale in not asking for ID and repeated visits by people, who we always keep talking about the, fraudsters being ahead of the curve. So I think here's an opportunity for them to be actually, much ahead of the curve. So in that sense, still confused, why did this decision come about in the first place? I agree with you and Karthik. But now that it has been taken, apart from the operational piece about how do people, deposit their 2,000 rupee notes with the banks. There are some macro indications that are likely to happen. So I think we must spend little time on looking at those parameters as well. So a couple of points. One is that the bank's liquidity would obviously increase because there are about 10% of the total, cash in India is still held in, in 2,000 rupee notes. So that's 3,26,000 crores. A lot of money, 10% by value, 1.5% by volume. But value is what is more important. So what should it all lead to, Shweta and Karthik? I think it should lead to greater liquidity, which in turn should lead to expectations that we might expect a interest rate, lowering interest rate at the discretion of the banks, not in a nudge from the RBI, and also possibly a raise in the deposit rates for people investing their money with PSU banks and private sector banks. The other big takeaway to my mind is, as it is panning out, is that there is a perk up likely in discretionary spending. As we have noticed now, people are buying gold, which continues to be the most favorite investment. And you just needed 2K currency being killed as another wonderful reason for gold to get a premium. So in that sense, discretionary spend could rise, which is being manifest with. Again, there is an interesting story. There's some jewelers, according to media reports, are asking for details in terms of ID cards, but not everyone is asking for those caveats, and they're accepting 2,000 rupee notes. And the bank managements that have come into the public domain are generally welcoming this decision. And the verdict overall, from economists to politicians more so have a consensus, especially those in the opposition, that this is aimed at targeting black money, is aimed at targeting politicians, and government continues to claim that it's targeted at black money. So we'll have to see exactly how it pans out in the days to come.
So, Shweta, there's another interesting hypothesis that I worked on over the weekend, and I'm not sure if that is really going to resonate with with economists or not, and that is a test case we should try and run sometime. Now we are in the midst of inflation. It has tapered down. It has come under check, and the whole monetary policy architecture around taming inflation is around creating a liquidity crunch at the end user, the spenders, citizens end, and at the same time suck out their liquidity so they spend lesser and push that money back into banks, which offer higher interests back to these customers who deposit. So you're trying to liquidate the banks, but you're trying to suck out liquidity from the end users, the spenders. Now, we've seen RBI increasing rates in a bid to liquidate banks and suck out liquidity from the market. Does it seem perhaps a case where the RBI is now, through this sort of withdrawal of 2,000 rupee notes, actually going one step further by creating a case for sucking out liquidity from the market, liquidating banks again, and create a scenario where interest rate cuts can now be on the anvil?
Okay.
So no need for more monetary policy intervention by way of rate adjustment. Inflation will in any case likely come down if these 3.62 lakh crore rupees, which are in the form of cash, go back, even 50-60% of that go back to to the deposits in banks. I think there is a clear case cut out for RBI to not tinker, to cut down rates and yet be able to manage inflation partly.
Okay, Rakesh, do you agree with that analogy? But one of the concerns that I have, and this is for the sake of our audience that's tuning in this morning, as to what led to the 2,000 rupee note being called back. Various reasons, of course, given by RBI. RBI says that this is an exercise that repeats itself. It was about time. The notes were in circulation for 4 to 5 years. Various hypotheses that we're all trying to draw. But for the benefit of our viewers, what do we know for sure? What do we know for certain as to why this exercise happened?
Well, I do expect the government of India, someone from the finance ministry, to speak on this subject. They have so far stayed clear of doing that, but they must speak, because public has a lot of questions and economists are divided, politicians have that consensus, as I outlined just now. I do believe that the government owes an explanation, because RBI has put out a page and a half or two-page note, which, to its defense says that the note was anyway, withdrawn in terms of being printed. So it had a limited shelf life. This is the shortest shelf life for a currency that we have seen in recent past. So I had put out a note on my social media post saying that it dies in the pink of its health. Someone pointed out it's killed in the pink of its health. So no. I mean, that's a valid point actually. One, that the shortest tenure for a currency at that value. Second, that is it killed or it died? RBI would make us believe that it died because it was a natural death, because they had withdrawn printing it, and there was limited circulation, and it was the stated intent that we want to curb black money. But a responsible government, when they take such decisions which have huge bearings on the public, this is not a macroeconomy debate being run in the RBI headquarters and the finance ministry in the North Block. It goes way beyond that. So I would imagine that it's prudent, it is realistic that the government comes out with a statement and says that why finally it was withdrawn. We do believe and we do know, and it is quite rational, that the RBI would have consulted the government. I don't see, like politicians, anything wrong in that. This is anyway a two-way process that right from the way India became an independent country, the central bank or the regulatory bank does consult the government, and we do know that when it comes to rate hike or rate lowering or rate management, MPC has government representatives on the board. So politicians can make thick charges, but I do believe that government would have been consulted, and if government has given a perspective and it has, so to say, given the nudge, it must come out in the open. There was a weekend in between. Probably they didn't think it's proper to come out in the open and state the reasons that you are asking me and I'm asking the government to come out in the
Okay. We can only hope that it happens today being a Monday after the weekend. But another interesting
and
story.
It's interesting how RBI always chooses a Friday evening. And I remember I've been in business news for about 18, 19 years now. Every time a big decision has to be taken either on rates or in this case, even in the withdrawal of notes, it's a Friday evening. Markets have closed. There's a weekend. You can damage control fairly easily.
You can damage control. That reminds me, markets have opened to a positive start this morning. This was something that was feared. Many were believing that this could have a negative impact, but that's not the case so far. We will, of course, keep tracking markets as we go through the day.